On to the topic of retail sector. With that, we'll move forward to the presentation by PWC. It's on Indian retail sector, ESG, opportunities and risks. So may I go ahead and invite the Senior Director and Market Leader for ESG Platform. We have with us Mr. Joseph Martin Shurur Francis with us here. Good morning, sir.
So, warm good afternoon to all. I will start from what Harsh stopped in the earlier session. What will make you super happy? I would say if I see my daughter smile, that will make me super happy. And more importantly, if my daughter's daughter can smile 25 years down the line, that will make me much more super happy. This topic of ESG, we might think that in the realm of retail sector, where splurging versus surviving is becoming the order of the day, especially because of the developments in the last 3 years. When you look at this ESG topic, I think there will be a lot of questions asked. Can we do something on ESG in the retail sector? Can we create business benefit out of it? These are the key questions which I face when I go and meet clients. Today, we will try to answer those questions, but before that, I'll give you a brief about what is ESG and what are the key drivers that are taking ESG to a strategic level within the corporates. How does it impact the retail sector? And what are the specific opportunities we have? So ESG, which is very much connected with the theme of MAPIC convention this year, sustainability, innovation, and human connection, environmental, social, and governance aspects. And when I say environmental, an example can be climate change, which we are all experiencing in these days. Social can be something related to human rights or diversity. Governance can be the ethics, transparency, which every corporate is striving to achieve. Why these three are together? Because these are three non-financial aspects of business that will have financial impact on the business. Not only today, maybe in the next quarter, next year, or 5 or 10 years down the line. So it has the time dimension where your balance sheet is already carrying some of this risk or the cost. But what is more important is how to create a balance sheet in the next 5 years, 10 years, so that we can contain that cost and risk and capture the opportunities. I'm just painting 5 key drivers here. One is planet degradation. I think I have to be an environmental activist now to say that our planet is degrading day by day. 390 ppm of carbon dioxide in the atmosphere, which is creating uncertainties in the climate, which is creating physical and transition risks for the entire economy. That is the basis of people talking about ESG at this point of time. Because the whole world have understood that sustainability of the planet is an important area which we need to really look at. Governments have come together, 195 countries have come together in Paris Agreement and agreed that we will try to limit the global warming by 2 degrees centigrade by end of the century, or at least try to achieve 1.5 degree if possible. So the regulatory pressure that is coming from, I'll talk about what are the regulatory pressure coming in India, that is coming from this global agreement with a firm belief that the irreversible environmental threshold of the planet is becoming overcome. Investor interest, if you look at United Nations Principles of Responsible Investment, which started 20 years back, never got traction in the initial days, but last 3 years, if you see, 4902 institutional investors, asset managers, amounting to about $121 trillion assets under management, they are signing with UNPRI, which means when they are deploying the funds, they are looking for ESG performance review and reporting. Corporate value. PwC had done a global M&A industry trends 2022. One of the key reasons why some of the retail and consumer business is going for M&A is to have control over the supply chain, especially when you look at the products you are selling. And if you want to make sure that those products are fulfilling specific ESG requirements, then that needs to be within your domain of control. So M&A in logistics and consumer is becoming a key driver from an ESG perspective. And last but not the least, the last year's 2022 consumer surveys talking about 50% of the consumers started looking at ESG as an important topic globally. And I'll come to what is the trend in India in the next slide. In the planet degradation, India is one of the countries which are going to face significant ramifications if the climate change is unfurling as it is predicted. We are ranking at the 7th. We had lost about 68.82 billion in the year 2019, and it is increasing, which means if the economy is having this loss, that loss is going to be translated to the business, to the citizens, and we all are going to face the brunt of it. Look at the customer voice here. ESG, when we did the survey last year, 2022, 44% of Indian customers are telling they will look at the environmental performance of the product which they are buying, compared to 30% globally. We are much more aware compared to the global average. When it comes to social, 53% of the customers are saying they will consider social aspects like human rights, diversity, and inclusion when they are buying the products in comparison to global 40%. And when you look at the governance, 50% of Indians will look at transparency, ethics when they are buying a product compared to the 41 global. Very clear reason why ESG is becoming important from a customer's perspective. Government in India is coming out with regulatory pressure. We are all aware of the national guideline on responsible business conduct. We are aware of the business responsibility and sustainability reporting which top 1,000 listed companies has to do by April 2023. That's a regulatory pressure that has brought out by SEBI. And more importantly, RBI had brought out a climate paper which is going to influence the entire financial flow in the country. So the finance flow is going to be channeled towards climate adaptation and mitigation, and finance flow will be cut towards activities where it is going to affect the climate in a negative way. So all these three major drivers are making ESG an important topic for the retail sector within the country. Now, when you look at these important topics, the common question business asks is, what is the opportunity I have? If you look at climate change, we are all talking about reducing the carbon emissions. But if your business is trying to reduce carbon emissions, it is not an additional cost. Most of the time, it will actually reduce the cost of operations. So reducing the cost, building resilience will be an important outcome against the risk of future losses from the climate change. Waste minimization can reduce cost. It can build resilience against the regulatory penalties. We are all aware of the extended product responsibility regulations that are coming. The social and economic impact a retail business can bring in, that can really bring significant amount of benefit by attracting talent and improving the reputation against the regulatory penalties of not abiding by the labor laws. Innovation is a key point with respect to ESG. If you really want to address ESG in a very profitable manner, you need to bring out technology as well as innovation in the business model. And the risk is, if you are not doing it, somebody is going to disrupt it, your business. One important point which I would like to talk about in the retail sector in India, in 2016, there was a study done by Ellen MacArthur, which talks about significant benefit for the economy. 44 lakh crore by 2050 is one of the benefits which they have mentioned. 44% decrease in greenhouse gas by 2050. 1 billion worth gold can be extracted from the waste, electronic waste, that is estimated. 8 million tons of steel can be recovered from the end-of-life vehicles. And 14 lakhs jobs and 2 billion. It's a significant opportunity for the economy. But how do we translate that into practical aspect? That is a question I think most of you will be thinking about when you saw these huge numbers which is predicted by. And it is not only predicted by Ellen MacArthur. Subsequent research done by many, many agencies, including FICCI, including some of my competitors who have done a lot of study on this, and including some of the recent capital market research that is done, circular economy is going to be an important element of Indian economy going forward. So there are some opportunities there which retail sector can really capture. And if you look at this Nifty 50 against Nifty ESG 100, Nifty ESG 100 had significantly outperformed consistently over a period of time. 2.8% to 4.8% in the last 3 years when you look at the ESG. So the question is, why this Nifty ESG 100 is performing better? What is the logic and what is the real reason for that? On the left side, you can see the current value. And on the right side, you can see what are the possibilities you can gain if you get into an ESG strategy and implementation. You can reduce penalties because you will foresee some of the regulatory stuff that is coming out. So that will help you to reduce the penalties. You will improve the cost structure. If you reduce the carbon emissions, if you reduce the water consumption, if you reduce the resource usage, you're actually reducing the cost structure of your business, which will improve the cost structure. You can gain access to market. Carbon border adjustment tax that is coming in Europe from the next year, which is going to penalize you on the actual carbon emissions of the value chain. That will become an additional cost for you when you're selling products in certain geographies. You can create new products and services. There are significant new products and services that are coming related to ESG. So that's an area which you can capture for increasing your top line. And then, last but not the least, build reputation and trust by doing ESG. But how do you reach from here to here? It's a very simple method which we are proposing. You start with your stakeholders. You have multiple stakeholders. You have investors, your customers, your society in which you're working with, your regulators you're working with. You engage with the stakeholders and then understand what stakeholders are expecting from you from an ESG perspective. Using their expectation, you can assess what are the most important topics you need to address. Because when I talk about ESG, it's like about 45 to 50 different topics. You cannot address all the different topics. So you need to prioritize and then bring it down into a small set of 10 to 15 topics. And that is where the materiality assessment will come. You establish a measurement system because you need to have a proper data collection, measurement, and verification system. When you look at climate change, carbon emissions, water resource, or even your material resource usage or waste resource usage, you need to have a proper measurement system. You need to prepare a roadmap by comparing your performance with your peers and what is expected out of you from a scientific basis. If you are a company with a particular size, the amount of carbon emissions you can emit, there is a scientific basis for that. There are standards and procedures which you have to follow to comply with those science-based targets, which can help you to prepare a roadmap. Monitor the implementation, and then you again communicate with the stakeholders. So when you do this cycle of ESG performance measurement and road mapping, there is a central piece of governance has to be established so that you can take your capital allocation in a proper way, you can take investment decisions, and then try to improve your ESG performance over a period of time, which will get you the current value from today to the future. With this, I stop my presentation here, and I would look forward for any questions or any discussions around it. Is there anyone in the room who is already doing ESG? Or is it something which you are planning to do? Or if you thought about it and if you have a negative view about it, no, that also will be an important thing to be discussed here. So is there any questions? I would be very happy to answer. So if there are no questions, thank you very much. And I'll be available for any discussions after this session. Thank you.